Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Monday, March the 7th, 2016. My name is Doug McKay. I am the founder and head moderator of Quantum Leap. Each morning we come together to take a look at the market, macro to micro, the structure, then drill down, take a look at the trade levels that we're assessing for the day, and then our targets and our hypotheses. This is a subscription room, so if you'd like to come in and check us out, I'll put up my contact information in just 1 second. Please read through the disclaimer first, though. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own trade metrics. Okay, so let's just put the contact information up. There's no website. This is not a commercial venture. If you want to come in and check us out, send me an email at quantumleapfutures@gmail.com. You will need a Skype account. We use Skype to chat back and forth. Everything else is done live here in the go-to session. But send me a contact request at Doug_McKay. And if you like this video, there's over 300 days of these pre-market sessions up on YouTube. Check us out. Check out our performance and our history. And if you like what I do, follow me on Twitter at Crazy2. So Friday, we were looking at a rotational day with an upside bias to go take out that 2008 area. We were looking for a rotation down to the middle of the distribution, possibly a little bit lower down into the 82. And then we're looking for responsive buyers to step in between the 85.50 and the 82 and rotate us up through, break out of the range high from Thursday and go up and take out that test into the 2000s and go up and take out those 2008s. We got to 2007.50 and then they rolled it over. We did say that it was going to be a rotational day and that we'd see both sides of things. They rotated all the way back down into the 91 area, chopped around, and then we closed right in around the non-farm, which was around 1994, the non-farm number. So pretty good day, pretty rotational. This was a little bit unexpected, this big move down. Didn't get any of that, but we did catch some of this and some of this and a little bit of this. And in the end, we ended up with a decent day. Take a look at the news. There is no news at 8:30 this morning, or there wasn't. We do have the Eurogroups meeting all day today, so we do have some headline risk there. 10 o'clock, we got labor market conditions. Then we've got Brainerd and Fisher speaking. They're probably going to backpedal on the 4 rate hikes this year. They're likely going to back away from that position. 3 o'clock, we got consumer credit. So that's our news for the day. Taking a look at the COT report, each Friday, Howard does up the COT chart. You can see that our zero line is right here. The small speck, which is the yellow, it's still getting more net positive. Commercial and large spec are net negative, so the smart money has left the room, although we don't know how high this rally is going to go into the 2000s. I apologize that I didn't put out the QLTP over the weekend. I completely forgot to do my numbers. I had so much on my plate over the weekend, and it completely slipped my mind. We'll be back to putting out the QLTP tomorrow morning. Okay, so let's take a look at the macro to the micro. Each day I like to start with a basic candlestick chart and just take a look at where we are within the trends. I use a 9 EMA and a 20 SMA. I'm looking for slope and separation, strength of trend, and where it's getting challenged. You can see that we have rolled over And so far in 2016, we failed to get above the 9 and hold on the monthly. We do have a violation of the upward trend. Going to the weekly, we had started this downward trend. We talked about this naked cross right here at 2008.75. They didn't quite come and get us. The high is 2007.50. It's still there, but I consider this to be a closed naked cross. It got as close as you can get on a weekly without actually hitting the actual number. We are above the 9 and the 20, so we have violated the downward trend. And key area today is going to be this 1984 and a quarter. If we get below that, I'd be looking for a move down towards the back down towards the 9 EMA before we get another rally up into the 2000s. But the down trend has been violated on the weekly. On the daily, you can see that we've got this upward trend going. We have created a technical gap. A technical gap will take us back down into that 67.75 area. But we do have an upward trend on the daily. On the 4-hour, we've had this strong trend up in the last 3 days. Now we're rolling over. We violated the trend, and we've challenged the trend. We're looking to violate it if we get below this 86 level and below the 20 SMA. So a little bit of weakness coming in on the 4-hour. The 1-hour, we've rolled over, and we do have slope and separation to the downside. So we are looking at a possible downward move right here and the start of a trend down. Going to the 30-minute, same thing. We had a little bit of a technical gap. They rallied it and failed off of the 9. Now we've got a start of a downward trend or continuation of a downward trend. Good slope and separation to the downside. And on the 15-minute, same thing. Technical gap, closed the gap. Now getting continuation. On the 5-minute, we do have a naked cross up here on the 5-minute at 1987.75. Just writing that down. There's another one up here at 92 and a quarter. On the 15-minute, there is one down at the 79.50 that we got to pay attention to. This one right here. Down here at 79.50, and on the 30-minute there's one at 80. That would be my initial target that I'd be looking at right now, is a move down into this 81.75 area and this naked cross here. This one's been taken out. Okay, so that takes care of that. Take a look at the big picture. So we broke out of this value that goes from the 7th through to the breakout day, which was February 29th. So far in March, we've had this nice little rally going. Friday puts in a doji, possible shooting star. We have broken below the 91.75, which was a key level for us at 92. And we are now sitting in this distribution zone between 81.50 and 91.75, trading around this 87 and a quarter. Last night, somebody was asking me what my target was last night. My target was the 87 and a quarter, and we did hit it, and now we're testing below it, and likely to come down and test the lower side of this balance. Anything below 81.50, look for a quick move down to see if they can pick up fine buyers down here between the 77 and the 74 area. This is where we've accepted value once we broke out of the balance that we were in. So if we can't hold that 81.50 and stay in this distribution zone, I expect us to come down into the 77.74. And then 67.75 is our key line in the sand. now below us. If we get below that, I'm expecting a bigger move down towards that 62 and 58. Remember, 58 and a quarter is, I think it's 58 and a quarter, I'll check on my other chart, is the 50% retracement of the significant breakout candle, something that we always look for. If we can hold the 8150s, look for them to come up and close the gap and test the other side of this distribution at 91.75. This has been a very key level for us. If we get above that, I'd be looking for a move up into that 94, return to the scene of the crime for the non-farm, and up into this 96.50 CHVN. Key line in the sand is above is going to be this 03 and a quarter. If we get above 03 and a quarter, I'm expecting to go up and take out those 08s, the naked gap, and a move up in towards this 13 and 17. 17 is definitely going to be next major resistance. That is where the microcomposite value low is from this distribution zone that we're up. And then once inside of that, look for 22, but the key number is going to be this LVN right here at 2550. This microcomposite LVN. This is the price rejection between the Gaussian distribution and the lower side of this double distribution zone. And then if we get above 25, it's going to be all about this 43 area. You've got the naked gap here at 36 and a quarter, but 43.75 is the next big destination above. Remember that the most traded price going back all the way to beginning of 2003 is up here at 2070.75, and the microcomposite VPOC, the most traded price within this distribution zone, is just above that at 72.75. So very big targets up here if we get above that 25. 25 is going to be a crucial number for us if we get above it. All right, so let's take a look at what's happened overnight. Our week open this week, the Globex open last night, is at 1994.50. So that's right near that scene of the crime, the non-farm number. We just went down and made a new low. We broke that that 86.75 and came down to the 84. We're right above the range low from Friday, so we still have lots of time. We could come down and break below. So I will be using the 84 as a trade level. Let's do the numbers below. Below the 84, look for support to come in. Let me just get my overnight stuff in. Overnight high is 96 and a quarter. Our VPOC is not likely to change. It is sitting right at that CHVN, 87.50. Okay, and our overnight low right now is 84.75. Don't know if it's going to hold, but I'll put it in. We'll adjust it as we need. So right now, I'm expecting that we're going to get a rotational day today as they battle to try to get us back up into the 2000 and into the 2000 area. We got a double distribution overnight with the VWAP here at 90. That CHVN that I was talking about, that 91.75 is just above it. So and our value area is low from Friday is there too at 91.50. So I'm going to be using 91.75 down to 90.75. What I mean by that is I don't want to be long until I'm above 91.75, and I don't want to be short until I'm below 90.75. So the LVN from overnight, the CLVN, the value area is going to be critical resistance to us up above. In this, in this zone between 84 and 91, balance is 87.50 at the VPOC. I expect both sides of those to be challenged. Below the 84, then we've got that 81.50, which is our key line below us right now. Anything below that, look for them to come down and take out the 77.50 and possibly come down to the 74. Two major targets below there. Below the 74, our key line in the sand is going to be the same as Friday, 67.75, with a trade area just above at the 70.50 area. And then below the 67.75, we've got the 64.75. Our daily ATR is running 35.25 right now. So off the overnight high, our daily ATR downside target is 1961. So we have range to come down into the 1961 and target that 62.50 just in front of it. And then our 50% significant breakout candle retracement is at 58.25. Below that, we've got the 52.25. Just making some adjustments here. And then support below that is actually going to be 49.50, and a target below that will be the CHVN at 47.75. Remember that 49 was where they accepted value just after the breakout. So that's going to be a significant target. And then below 47, 41, 38, and the next key line in the sand is going to be down at 32.75 with a target just above at that 35.50. The 36.50, remember, is the value area high of the balance that we just broke out of. And then below that, our weekly ATR downside target off of the high overnight is down here. Our weekly ATR is running 76.96, so our weekly ATR downside target is down at 19.25. To the upside, if we dip down, find some buyers down here and come back up above 84, or we hold above 84 or 81, look for them to come up and test the value area low and that CLVN at 90.75, and a break above that, obviously a move to take out the gap, return to the scene of the crime at 94. That's what I'll be targeting with a gap fill, and then the overnight high at 96.25. If we come up here and accept price between 94 and 96, look for them to move up to test the upper side of that distribution around the 96.50 and test the 98.25. But really, the number I'd be looking at is the 2000, and I'd be targeting just in front of this 99.50 at 99.25. If we stay inside of here, we get an 80% value area destination. That takes us up to 03. Remember, this is our key line in the sand above. Because if we break out of value, we've got the fractal high here at 0750, but more importantly, we've got the 08.25, and I'd be looking for the rule of 10 to play out at the 2010. I would even use the breakout here above the 750 into the 08.25, but expecting continuation to take out the 2012. And then we've got a target at 1350. And then our next major resistance, of course, is that 1775. We've got a naked VPOC up there. Our daily ATR target's going to just change slightly off of the low. What was the low we just put in here? $84.75 plus 35.26 changes our daily ATR target down to 2020, slightly lower, and then our weekly ATR changes to 61.75. Okay, so above 17, look for the daily target. 22.50 is our next support. Then major key resistance at 25.25. Above that, look for 36. Look for this 36.50, and then that crucial next big target above at 43. A little bit of resistance at 49.50, and then the 55 and the 62 to 64 area. I don't think we'll get there today. I think we're going to, this is some indecision coming in. I'm looking for us to chop around in this distribution zone, possibly come down to the 77, 74 area. We had a very strong move up, and we moved too quick, too fast. We're likely to come back and test some of these lower areas, repair the auction. So my key hypothesis for the day is a rotational day with a downside bias down into the 77.74, finding responsive buyers down here, and then taking us back up through into the 2000s again. If we get below the 67.75, they don't find buyers there, then I'm looking for a bigger move down towards the 58 to 52 area. But I think my main hypothesis is will likely play up. We're going to chop around, get a rotational day, test down lower, and then creep our way up higher. If we don't break the 84 area, look for them to come up and test into the value area, possibly chop around up in here and reject the 2000, and then come down to the 77, 74 area. So that's what my major two hypotheses are. Keltner center line is sitting at 88.75. Move down to test the lower Keltner, take us down to the 83, likely to be closer to the 81.75 by the time we get there. If we get above the Keltner center line, a move up to test the upper Keltner will take us up into that 94 area and likely close the gap and take out the overnight high. Take a quick look at gold. So we, tested that 81.10, CLVN. We broke out of this value. I'm going to add these days back in, but what I want to do is I want to put a new profile around this current little balance zone. And you can see that we've got price acceptance here at 1262.20. If we get above the 1271, look for them to come and break the range high, break out of this 81.10, bring us up into this 86.60. And get some continuation. If we can't get above the 71, I think we're going to chop around. We'll come down and test the lower side of this low value area here. We've got the smaller 3-day value area, microcomposite value area low down here at 55. So really looking for gold to get choppy in this area. If we do break the 52.70 though, look for them to come down and come back into the balance that we've been chopping around and come down to this 41 and 38, 39 area. So that's what I'm looking at in gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.